if you are buying a house and you have money to put down, why would you go with an FHA loan? Stick around to the Unlocking Doors podcast. Michelle Castle and I are going to talk about all things FHA. We're going to talk about financing. And we're going to get to the bottom of this. So, Michelle.
Money, money, money. I like that subject.
Money. Yes. So today we're talking about FHA loans. And I've seen this a couple of times, both on the listing side and buyers that I've worked with. And it's somebody who is not a first-time home buyer, which some people think you have to be a first-time home buyer to get an FHA loan. And maybe it's somebody who has plenty of money to put down instead of the 3.5%. Maybe they're putting 10 or 20% down. Why would somebody do that?
Why would you go FHA?
Yeah.
That's a really good question. And people even refer like, I want that first-time home buyer FHA loan. Yeah. Well, FHA is not just for first-time home buyers. So to go FHA, some of the advantages of going FHA, if you are putting less than 20% down and you are doing a conventional loan, you're going to pay twice as much monthly for the monthly mortgage insurance than you would going FHA.
Okay.
So sometimes it's just a matter, interest rates lower on an FHA. So if you're going to save money monthly with the interest rate and the mortgage insurance, and you're only going to be in that house for 3 to 5 years, FHA probably makes more sense.
Right.
Even if you're putting 5 or 10% down payment, because it's just going to cost you less money. So now, if you're going to be in the house for a longer period of time, let's just do the math. Maybe you are going to pay twice as much for your monthly mortgage insurance on a conventional loan than you would FHA, but you're going to be in the house for 10 to 15 years. It might make sense because with a conventional loan, as a lot of people have experienced in the last 2 years, if your house appreciates and you have 22% equity in your home, on a conventional loan, you can request to remove that monthly mortgage insurance.
Right.
But back to your question, a lot of people go FHA just because of the savings monthly in the lower interest rate and the lower monthly mortgage insurance.
Now, are there some other scenarios where maybe it's not necessarily their financial choice? I mean, is it as far as like their financial situation and what they qualify for? What would be a reason that might happen?
Credit score.
Credit score?
FHA is not as particular about credit scores.
Okay.
So say you've got a 580 credit score. FHA might be would be the only way that you could finance a house if you were comparing, your mortgage loans.
Okay.
Well, FHA or VA.
Right.
Another reason would be a bankruptcy. If you've had a bankruptcy in the last couple of years with FHA, if you're 1 year into a Chapter 13 bankruptcy, you could look at FHA financing. Whereas on a conventional loan, that's not an option.
Right.
You've got to be discharged for 7 years on a conventional loan.
Right.
So there's times debt to income is another reason a lot of people go FHA. FHA's got a lot more flexibility on how much debt you can have compared to your income.
Right.
Conventional is pretty strict. I mean, it's really at a 45% debt to income. FHA, you can sometimes go up to a 56 or greater. So that makes a big difference too, especially right now. I mean, you think about it, we're not putting people into homes they can't afford.
Right.
But maybe there's somebody that has some additional income. Maybe they're self-employed and they're not reporting all their income.
Yeah.
FHA is going to have some flexibility on that debt to income. They can afford the payment, but on paper, maybe we're not able to qualify them on all of the income. So that'd be another reason.
And correct me if I'm wrong, but like if it's somebody who's picking up overtime or they're getting reimbursed for
per diem,
stuff like that, that is income, but maybe it doesn't qualify the same as, or they're getting overtime. Did I say overtime? Yeah. Overtime or, anything like that.
The extra income, shift differential and things like that, or bonus. There's a lot of times that's still household income, but it's not qualifying income because maybe there's not a 2-year history of it.
Right.
So there's a lot of times where there's income coming in that we're not able to count, where FHA is a better option because of the flexibility in that debt to income.
Okay, great. So one question before we started recording, you asked, do sellers look at, on the receiving end of those offers, do they look at conventional and FHA offers differently? And I'll say sometimes they do, sometimes they don't.
Can I say something I shouldn't say?
Yeah.
I think it depends on the age of the seller.
You think so?
Yeah. And the reason I say that is because years ago, there was a big difference in how an appraiser would look at a house FHA compared to conventional. So if you're a seller and you hadn't sold in the last 15 to 20 years, you might be thinking old guidelines in terms of the condition of the property.
Yeah.
So I think that's a, typically I hear those questions when the seller is older.
Yeah. So I will say, if you're looking at like, if somebody has a conventional loan, 25% down, and they're offering the same amount as somebody with an FHA, 3.5% down, I do think sellers look at that differently.
I do too.
Even from a property condition standpoint, if the home needs, let's say
peeling paint is one.
Peeling paint's a big deal. Like splintering boards or wood rot around the house, the eaves, anything like that. Like those are big deals. And if the seller is
big deals, as in
like the appraiser's going
to look at that on an FHA. The appraiser's going to
say that has to be a condition that's repaired before closing. And whereas with that conventional loan, they
may or may not.
They probably, well, with 25% down, they're pretty much like, we don't really care the condition of the property as long as we think it's worth what, it's under contract for with this condition. But they're not going to ask you to come in and repair anything. Now, here's a misconception that I hear all the time is if it's a conventional loan where it's 3% down or 5% down, some agents and some sellers think that the appraiser, just because it's conventional, is not going to have any comments about the condition of the property, which is not true.
Right.
Like if it's a house that has some of those safety hazards and chipping paint and rotting wood, an appraiser is going to call that out, whether it's conventional or FHA. So if you're looking at similar down payments and similar, similar price point, of offers on the same property, there's really not a huge difference between FHA and conventional, in my opinion.
No, you brought up a good point. Yes, condition could be a factor.
Yeah.
But in terms of what a seller would net between the two, there's not a difference.
Yeah.
Yeah.
Yeah. And usually, like whenever we're marketing a listing, we will say, by the way, like you can check the boxes of this will go conventional and cash or yes, it can go conventional cash, FHA, USDA, VA, all the above.
Right.
So we kind of know going into it whether we need to be advising our clients to accept an FHA offer or not based on the condition. So,
but it doesn't determine whether or not the loan will fund any differently in terms. If you're working with a reputable lender who really is pre-approving someone,
right?
As far as the seller is concerned, the deal's going to fund based on that loan program. It's not going to change just because of it. It's FHA.
Right. And there's, I've had several deals on the listing side where halfway through the transaction, maybe not halfway, but, a week into the transaction, the buyer and their lender have switched from conventional to FHA because they figure out some of those DTI or credit issues.
Or maybe that was the strategy up front.
Or maybe that was the strategy up front.
Unethically, but still.
Right. And it doesn't change a single thing on my seller's end of it, other than they have to sign, the FHA mandatory clause. And but it doesn't change how an appraiser is going to value the property. It doesn't change any of the other circumstances on what that property is going to close out at, whether it's FHA or conventional.
Yep. The other thing that I think matters too is just making sure that your concessions, anything that the seller is being asked to pay on the buyer's behalf, there is a difference between those guidelines. So the financing addendum obviously needs to be correct, and those concessions need to match too. But
so that could be another point that brings up another point of why go FHA versus conventional is the
amount the seller can pay on the buyer's behalf.
And correct me if I'm wrong, but on an FHA they can pay up to 6% of the purchase price.
Correct.
Conventional is under 20% or under 10%. It's 3%.
Under 10%, it's 3%, and then 6% to 20%.
Okay, yeah. So that's another huge reason that if I was not even first time home buyer, but if I was strapped for cash and I knew I could get 6% in concessions and the seller was willing to agree to that, then yeah, that's the better
Well, I
option.
think right now, another reason people are asking for seller concessions because they're using the cash that they have available to pay off debt so they can afford the house payment.
Exactly.
And the seller helping them with that upfront cost so they can allocate their funds to paying off debt. We're seeing that a lot right now too, just because people are debt heavy.
Yeah,
So,
for sure.
Just all strategies. And I think what matters more than anything is just open communication between the lender and the buyer's agent and the buyer, and then the buyer's agent being able to relay that information to the seller's agent to relieve the seller's mind when an offer is being presented. It's all communication, right?
Absolutely. And that's the worst thing is whenever, like, I've had better success getting offers accepted and deals closed for my buyers whenever I tell the listing agent, like, hey, here's the situation. The lender has already confirmed this, this, and this. We just need these concessions. They have to go FHA for this reason. But they're a strong buyer. They're well qualified. It'll close.
Yeah. And as a buyer's
long as it
agent, you need to be,
appraises.
you need to be willing to ask those questions because it all matters.
Yeah. So communication is huge.
Communication.
Anyways, that is a wrap for all things FHA. If you are in that position where even if you're not a first-time home buyer, but you're maybe strapped for cash or your credit's a little iffy, get in touch with Michelle. She can walk you through all of your options, the pros, the cons of going FHA, and she can get you the money for that house that you are falling in love with. So that's all for this episode of the Unlocking Doors podcast. We'll catch you on the next one.